Hello, everyone. Welcome back to Personal Finance Made Easy. Are you having trouble choosing a financial advisor to fit your financial needs, plans, and budget? Today, we are going to go over the types of financial advisors as well as the 10 best questions to ask a potential financial advisor to help you get an understanding of what they offer, who they are, and if they are a good fit for you. We'll also review why these questions are important in deciphering if a potential financial advisor is right for you. First off, an important benefit of understanding personal finance yourself is your improved ability to judge the advice of financial advisors and choose those that fit you best. Financial advisors are great for helping you navigate the vast and frankly confusing world of finance. Choosing the right financial advisor may greatly influence your financial plans and, more importantly, the actions and decisions taken to achieve your plan. To learn about a financial plan, please watch the videos linked in the description. It is important to at least have an outline of your financial plan in place before choosing an advisor, as it makes the selection process much easier since you already have an idea of what you want and need from an advisor. However, it is okay if you aren't sure where to start. That's what some financial advisors are here for, depending on their specialties, of course. Financial advisors come in many forms, including but not limited to investment advisors, broker-dealers and brokers, financial coaches, certified financial planners, financial consultants, portfolio, investment, and asset managers, wealth advisors, robo-advisors, and accountants. Let's define each type of advisor. An investment advisor is a person or company that is paid for providing investment advice to clients and may also manage a client's assets and investments directly. Ensure they are registered and regulated, as this title is sometimes also used as a job description versus a credential title. A broker-dealer or broker is an individual or company that buys and sells securities like stocks, bonds, mutual funds, and other investment instruments. They can buy and sell on behalf of a client as a broker for their own account as a dealer, or both. A broker-dealer sells and buys investment instruments based on their licenses and credentials, so not all are made the same. A financial coach is someone who focuses on the basics of financial literacy and financial education by teaching one about the concepts of money, including how to save money and reduce spending. They are great for those new to the world of finance and money and can be a great resource to help you build your wealth on your own before working with other types of financial advisors, such as investment advisors. A certified financial planner, or CFP, is a person who has met extensive training and experience requirements required by the CFP board and has passed the necessary certification exams to receive the title. These financial advisors are held to high standards as they have a professional designation similar to a lawyer or dentist and are governed by a regulatory body. Some CFPs are investment advisors, while others offer guidance on things like debt management and paying down debt, planning for retirement, creating budgets, or creating an overall financial plan and its components. A financial consultant is a general term that can be used by anyone, but many hold the designation of Chartered Financial Consultants, or CFCs, similar to CFPs. They are essentially the same as a financial planner or financial advisor and offer a number of services with the financial advice tailored to the client's specific needs and goals, which are pre-established before any advice or consultation begins. They may also provide investment services as well. Portfolio, investment, and asset managers are exactly what they sound like. They manage clients' entire investment portfolios, including all types of investments, and may also offer other financial planning services to go along with it. A wealth advisor, also called a wealth manager, is someone who typically works with wealthier clients with large amounts of wealth to be invested or managed, typically with minimum investments in the millions or more. They can aid a client in many areas of the finances, including but not limited to investment advice, tax planning and completion, charitable giving, estate planning, and various insurances such as health, disability, and life insurance. A robo-advisor is an inexpensive automated investment management service that uses AI and computer algorithms to create and manage a client's investments based on pre-specified goals. They charge a small fee, often smaller than human financial advisors. Common ones include Wealthfront, Ellevest, and SoFi. Lastly, an accountant is someone who gives advice about business organization and planning, including planning for and preparing taxes. To be an accountant, one must be a chartered professional accountant, or CPA, meaning they have extra credentials, training, and must pass an exam. CPAs are usually certified through their province or state and must meet the qualifications and components each year and pay a professional fee to remain a CPA. Check your province or state's registry to ensure their credentials are up to date. Remember, titles aren't everything. Many of these common titles used by financial advisors aren't necessarily tied to specific credentials, training, or registration. That is why asking questions about the advisor is so important. You will need to find out exactly who they are and what they specialize in. Now let's get into the 10 key questions to ask your financial advisor to evaluate if they are the best fit for you. We'll also review why these questions are important to ask. These questions are from the Financial Planners Standards Council of Canada and can be found on their website below. Question 1. What are your qualifications? An important designation for financial planners is the Certified Financial Planner or CFP designation, as it means they have the necessary training, experience, credentials, and competence to be a financial advisor. What specific kinds of training do they have? What steps do they take to stay up to date on changes and developments in the financial planning field? Question 2. What experience do you have? It is important to find a financial planner with experience in the market, but you should also inquire about any specialty experience they might have. Do they have particular experience with mortgages, investments, or estate planning? Do they have experience with market volatility and recessions, especially if they are investment professionals? Are they up to date with modern parts of the finance industry, such as cryptocurrency and any new laws and regulations, such as taxes on investments and capital gains? What kinds of people and portfolios have they worked with in the past? Question 3. What services do you offer? It is imperative to ask yourself first, am I looking for an investment advisor or manager, or do I require a comprehensive financial planner? Then you should inquire what services the advisor has to offer. There are many different areas of financial advisory, each requiring different expertise, experience, and skill sets. Services will also differ from business to business and between the advisors within a single business, so knowing what you need and what they offer means you can find a good matchup. Question 4. What is your approach to financial planning? Some investment advisors' approach is to play it safe, investing in mutual funds built primarily from government bonds, for example, whereas other investors are risk takers, focusing on high-risk, high-reward stocks. Some advisors prefer to focus on shorter-term goals, the ones that take precedence now and may be more suited to their area of expertise. It might be better for you to find an advisor that focuses on the overall long-term picture and builds short-term goals and actions that keep the long-term goals and overall plan in mind. Question 5. Will you be the only person working with me? Some people prefer a diversified team of investors with different strengths and backgrounds, whereas others prefer the simplicity of communicating with only one person on all their financial needs. Often you can find a hybrid option where you deal with only one person directly, but a team of people work in the background. Also keep in mind that many financial advisors work with other professionals in your life, such as your accountant and lawyer. Question 6. How will I pay for your services? Financial advisors are typically paid in one of a few basic ways, with some exceptions. These include commission, fee only, or via commissions and fees, a hybrid option called fee-based. Some investors are also paid based on portfolio performance. If you work with an advisor who only charges commission, expect to pay the commission upfront as a portion of the money you invest. If you work with an advisor who is fee only, they may charge an hourly fee, a flat fee, or a retainer fee. An hourly fee is pretty straightforward, paying for the time they spend with you and on your case. A flat fee is usually a lump sum for a specific set of services, such as $2,000 to help you understand how much you need for retirement and a plan to get there. If you are charged a retainer fee, it is a set amount of money at a set price per hour. An example is an $800 retainer fee at $100 per hour. If they work the specified hours, then no additional fees are required. If they work more than those 8 hours, they will bill you for the additional hours, and if they work only half of the 8 hours, you may expect a refund of $400. Fee-based advisors charge a combination of the two. Suppose you work with your advisor to invest $5,000 into your RRSP or Registered Retirement Savings Account, akin to a Roth IRA or 401k. At $200 an hour, your investor will create a detailed investment plan for you that includes a mutual fund charging 4%. Here, the 4% is the commission part of the payment, and the $200 per hour is the fee part of the payment. You'll pay the advisor 4% of your $5,000 investment, equaling $200, and invest the remaining $4,800. If they spend 8 hours on this, you'll also pay $1,600 for 8 hours times the $200 fee. Combined, you'll pay a total of $1,800 to your advisor. You should avoid investors and advisors who receive the following payment methods. Do not utilize an investor who makes a commission on the investment instruments they're selling to you. They could be biased and simply looking for that extra payday versus having your interests in mind. Do not work with investors who charge you fees on uninvested cash. This is cash they are simply holding but have not yet invested for you. Since they are doing no work on it to earn you a profit, they should not charge you fees on it. Lastly, investment and financial advisors should not charge you any hidden fees. All fees should be declared and approved upfront, and hidden fees should be a cause for alarm and investigation, including reporting the advisor to the regulatory board and pulling out your investments with them. Question 7. How much do you typically charge? As seen in the last question, there are different ways that a financial advisor may charge you for their services. Now that you've asked their method of payment, you should ask their rate of payment. Shop around between your potential advisors that offer similar services and compare their rates, including all the methods they may use to charge you. Do your research and your homework to get the best value. Question 8. Who, besides me, benefits from your recommendations? As mentioned before, some financial advisors may still use sound financial advice, but choose methods or payment structures that give them extra commission on top or improve their reputation in the financial industry. You should know if they are one to benefit and how they benefit from being your advisor. Also, make sure to ask the planner if they have a written professional obligation to put your interests ahead of their own. Reference question 1 for the CFP designation. It includes a code of ethics that clearly states a client's interests come first. You may also want to look for an advisor that keeps in mind your family, spouse, and/or kids and what you want for them. This is especially important for estate planning and risk management strategies. Question 9. Are you regulated by an organization? Financial planners who sell financial products and provide investment advice must be regulated by provincial or state regulatory authorities. Many also subscribe to a code of ethics via professional associations such as FP Canada, standing for Financial Planners Canada. These planners, holders of the CFP designation mentioned in question 1, are subject to internationally recognized professional standards of competence, practice, and ethics set and enforced by FP Canada, called the FP Canada Code of Ethics. Some advisors are members of the accounting and legal professions and are usually members of the professional bodies that govern their fields, similar to other professionals like those in the healthcare industries. You should also ask your advisor if they have been subject to any disciplinary action by a regulatory body or industry association. If you're unsure, you can contact the relevant association and inquire. Question 10. Can I have it in writing? Ask the planner or advisor to provide you with a written agreement that details the services as well as the costs and fees of those services that you'll be provided. Now that you've looked into the type of advisor you require and asked your potential financial advisor these questions, you should have a good understanding of which advisor or advisors you'd like to work with. To further improve your understanding of their advice and to aid you in choosing the best option for you, we recommend watching our other videos for more financial education to improve your financial literacy and understanding of smart money concepts. Thanks for watching and make sure to subscribe for more videos.